So today we're going to do an update on Hims and Hers stock, my largest position in the stock market. I was going to do the UK stocks I'm buying, but I thought, you know what, with how much Hims and Hers has been going down the last few days, I'm going to talk about it, and then I'll probably do the UK stocks I'm buying on Sunday for you guys. But yeah, we're going to talk about Hims and Hers because it's been a tough week. I wasn't going to talk about it, and then with the drop that it had yesterday down another 15%, I thought, yeah, we're going to have to talk about this one and what's going on with Hims and Hers overall. Apologies yesterday as well. My microphone didn't work. Hopefully you couldn't tell that much. I tried to edit the audio slightly. Today I don't know if it's going to work or not. It might end up being the built-in microphone. I've got a new one coming. It just hasn't made it in time for this video here. Anyway, let's get on to Hims and Hers. So yeah, really tough time for it at the moment. When you look and zoom out, the stock really since the mid of February down 49%, half its value wiped off the stock, which is obviously a really dramatic dip. And when you look at that point of view, that's a very significant dip. And in that time frame as well, you know, you look at the S&P 500. I mean, the S&P 500 is down what, 6%? So yeah, it is. It shows you that some of these stocks, some of these growth stocks in particular, they can very quickly have a, you know, the S&P only drops a bit and some of these stocks can drop, you know, huge amounts. You know, you look at Palantir, for example, that's down nearly 35% since that time frame. Robinhood, that one's down 31%. So just a little small drop on the S&P 500. Look at what it means to some of these growth stocks. They can drop huge amounts. And I think people forgot this. I think when these stocks were going up 10% a day, 20% a day, people were like, oh yeah, this is going to last forever, and not realizing that when the negative days do come for stocks like these, they do come for them pretty hard. Now, the big thing is you got to zoom out a little bit. You know, the only people that are panicking at the moment are the people that have been buying it $46, $50, $60, $70. Those people that got a little bit FOMO, maybe didn't run the valuations, those are the guys that are suffering at the moment. Now, for me, obviously, that's not me, and if you're the same on Palantir and Robinhood and you've been in these stocks for a few years, you're kind of going, yeah, it's not great, but then you're looking at the average that you have at the moment and you're like, well, yeah, it's not great, but still up 380% on my position. And that's the benefits because I bought when the stock was not wanted, it was undervalued. I'm still up on this position huge. So I'm not really panicking at the moment. So yeah, when it comes to like looking at the account, I've not really looked at my account this week at all. So I think if it's the people that are panicking are looking every single second going, oh, look at how much I'm going down at the moment. And if it's getting too much for you, you know, you should be buying the S&P 500 really. You know, have an easy life, have an easy investment. But for me, yeah, I'm not panicking at all. But what did make me laugh is like the people that come out and like, you've seen all of a sudden, I'm going on X and seeing people talk about Hims and Hers negatively. I even had this tweet the other day where somebody said, there's a reason he's called Joker Investments. I tell you what, you're going to be on live at the Apollo with jokes like that. Yeah, and I was like, yeah, I'm only up 360% now. I'm really upset by it. It makes me laugh. You know, we're still, you know, an absolute ton on this stock. And you know what else is helping with the current drop on Hims and Hers is that it still made me a lot of money. You know, when the stock was at these highs where I was going, okay, you know, when it looks like a rocket ship on the stock chart, we've probably got a little bit overvalued. And, you know, you look at the profit that I've taken off during the last month alone, and we've got a trim of 960%, 930%, 850%, 800% 715% return. I'm not really bothered. You know, I'm still up on my position a lot. I've took nearly a 10 bagger, 10x my return off the table on Hims and Hers. I'm not really bothered that it's going down. I've made that much money from Hims and Hers that I'm not really bothered it's going down. And that's the position that I'm in because I bought the stock when nobody wanted it, a good valuation. I wasn't chasing the stock. I wasn't FOMO. I don't care where Hims and Hers goes in the short term right now because I'm happy. The people that are not happy are the ones that have maybe bought at ridiculous valuations and can't value a stock, which hopefully, you know, you can learn from that and realize that stocks don't just go up. And the people that didn't take any profit off the table, and if you didn't take any profit off the table, let this be a wake-up call that sometimes when the stock chart looks like a little bit of a rocket ship, when you start running your numbers and the valuation, you go, this is a little bit crazy, you know, maybe it's time to take a little bit of profit off the table, you know. I remember during this time frame, like people were saying to me, like, why are you becoming a short-term trader? Why are you taking profit off the table? I thought you were a long-term investor. I am a long-term investor. I just know that even when one of my favorite stocks goes overvalued, I probably should take some profit off the table. We're here to make money. We made money on the stock. That's the main thing. So it's been a funny kind of couple of days because I've watched a lot of people panic, and I've not been bothered at all. I'm still up a huge amount on my position. I've made a lot of money on my position, and it's funny to see like a couple of people come out out of the woodwork and be quite negative to Hims and Hers, and it's like, well, yeah, but the stock is still up 300% during that time frame. So yeah, it's been funny to watch. Overall, looking at the stock, a few negative stories out there. Obviously, the market in general. There's the concerns around the Eli Lilly and the shortage going on over there. And that affected Hims and Hers. Obviously, they're not the copycat that they do the Novo one. But it still sent Hims and Hers down. It's just a load of noise. All this GLP-1 stuff at the moment, I've said before, I'll be glad when it's kind of over. I think it's a distraction from the long-term story from Hims and Hers, and it's just caused so much volatility where it's attracting short-term traders, short-term investors, day traders, shorts. It'd be better when we just kind of zoom out and we just look at the long-term picture, and that's what I'm in for. That's why I'm not really looking at I'm up and down that much really on Hims and Hers at the moment, because there's just so much noise about it, and obviously I'm not there for the noise. I'm there for where Hims and Hers is going to be in 4 or 5 years' time. And as I look at the Hims and Hers, I just think they're going to continue to execute. Obviously, great track record since I started investing in the stock, 3 years ago. Looking ahead, still looks like insane numbers for them going forward. 92% revenue growth. EPS expected in the next quarter to go from 0.1 to 0.2, doubling up of the EPS. If they carry on doing numbers like this, the numbers are going to do the talking. 3, 4, 5 years' time, the numbers are going to do the talking, and I'll make money from it, and we'll see the execution that they've done previously continue, and the stock will go up, and it'll be reflected in the long term. And I just ignore the noise in the short term. I'm looking at the long term and thinking this stock is going to do very well for us. I'm looking at the valuation right now, and I think the valuation yesterday fell to like 35 forward times earnings. 35 forward times earnings for a stock like this is a little bit stupid, but it is what it is. And as the stock continues to drop, as it is doing, I'll buy some shares because I think the valuation is good at the moment. I'll buy some shares. And as the stock more aggressively drops, I'll continue buying more and more shares. Just like how I did in 2022 when I made the last, bit of good average and good money from that. Now, what I will say is that sometimes what I think people are not realising that this is a, 6% drop on the S&P 500, and this is what it's translated into a drop on the Hims and Hers stock price. Just be careful, because if we are going to, I ain't got the crystal ball. I can't tell you what's going to happen in the future. But just be careful, because if we are going to enter a more serious crash, like right now we're not in a crash in the stock market. We're not even probably in a correction really. We're not down more than 10%. So you imagine, let's say we go down another 6% in the market, another 12% in the market, dare I say 20% in the market. Just be aware, and I think maybe a few people are jumping in this Hims and Hers dip and going, oh, I'm going all in, and just be a little bit careful. There's nothing wrong with being a little bit steady, because if you buy some shares now and the stock goes up, you win. But if the stock goes lower and you've gone all in, what are you going to do from there? And then that could happen with the stock at the moment. This is only a little bit of negativity. You imagine if this negativity continues for the next 6 months. You imagine if the S&P goes another 6, 12, 18% lower from where it is right now. If that was to happen, imagine where Hims and Hers will go. It will drop. It will go to like $18, $15. It will happen. I know people right now are thinking, really? But it can happen. Any of you guys that went through the 2022 stock market crash, you'd have seen valuations don't matter, financials don't matter, the stock will just go lower and lower. Now, we don't know if we are going to get there, but you've always got to just have that in the back of the mind. What would you do in that situation if you've gone all in at $34? You've just got to be a little bit careful, and then that could happen. I've seen it before. I saw Hims and Hers go down to 24 forward times earnings for a company that was growing 80% year over year. It'll happen. Financials don't matter in a bear market. Now, we're nowhere near a bear market, but that's what will happen. So I did take a buy on Hims and Hers last week, and a few people have asked me since, like, are you going to pull the trigger on it? And I will. I've not done it this week because I bought last week, and I'm just going to have a little bit of patience, and every so often I will nibble away at the stock, and as the stock goes lower, I'll just be a little bit more aggressive. But the numbers there, the stock is back at attractive levels, because when you start looking at financials now, 25, 30, 35% revenue growth, I think this is achievable for the revenue growth point of view. Assume some form of slowdown in the current levels. If we look at profit margin, I think they're currently like an 8% profit margin right now. So I think as they scale up, and we've seen in the latest earnings report, as the scale of efficiency starts kicking in, they're going to have higher profit margins than where they do right now. So I think even this could be classed as quite conservative for the next 5 years. But 10%, 12%, 14% profit margin. I've just realised I've not actually updated the recent numbers. The recent numbers are actually 2.3 billion for 2025. Apologies for that, because they've actually just done the recent hike up in the guidance. That's how fast Hims and Hers are moving. Low side, 200% upside. You know, if they were to do 25% upside and 10 times profit margin at a 40 times multiple, I'll update that there because it says 20. I've got 40 times earnings in. Yeah, that's a lovely bit of upside. Mid side, 334% upside. And then on the high side, 488% upside. That's at 40 times earnings, and that's quite conservative numbers. I mean, realistically, a company doing these sort of numbers, if the market wants to go crazy, it would put metric expansion. It could even put it up at like a 60 times earnings multiple. You start going at a 60 times earnings multiple. Now, obviously, like I said to you before, I don't like assuming crazy valuations, but let's just say that the market does put it up at a bit more of a premium, even mega upside. But even not considering that, even on the high side, if I was to go at like 20 times earnings instead of 40 times earnings, so much upside. So I look at Hims and Hers and I go, I just ignore the noise in the short term. I'm in a happy position because I've got a good average. I'm still up on my position a ton. I don't care that it's going down because I've made that much money off it. I'm not really bothered. I did cash in some. And now I'm thinking, well, you're giving me another opportunity to buy. And as it goes lower, I'll just keep buying every so often. I'm not rushing in, steady buying. And then I'm a winner either way, because if the stock keeps going lower, I'm getting more upside and I'm buying. If the stock was to bounce from here, you know what? I got to buy in and the stock's going up and I'm making more money either way. Either way, I make money from here. So when I'm making money from either direction, I'm not really bothered about what's going on with Hims and Hers in the short term. I'm looking in the long term. And yeah, I think we'll do quite well when we come back and maybe watch this video back in 2028. We'll go, yep, there was a little bit of an opportunity there. So yeah, thanks for watching, guys. I hope you enjoyed a little update on Hims and Hers. And like I said, I'll do the UK stocks I'm buying video for you probably on Sunday anyway. See you in a bit, guys.